So what would happen if the price were to sweep a sell-side liquidity? Well, most of the time, the price goes up. Now, what would happen if the price were to sweep a buy-side liquidity? Well, it's the opposite. The price goes down. The idea of liquidity is crucial for smart money traders like the big banks, hedge funds, and other major market players because they believe that retail traders like you and me often place their stop losses and pending orders at these liquidity levels. By deriving prices into these zones, whether it's buy side or sell side, they can trigger and invalidate our stop losses, effectively taking our money. But with an indicator like the Liquidity Sweep Filter by AlgoAlpha, you will be able to spot exactly where these liquidity levels are sitting. That way, when the smart money moves the price to those zones, you can trade in the same direction as they do instead of getting caught on the wrong side of the move. In this video, you're gonna learn all about this powerful indicator. If you find value, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, you want to go to TradingView, the trading platform that I'm going to be using. If you haven't signed up yet, there's going to be a link in the video description for you to do that. Next, I'm going to load the 15-minute time frame of TSLA, which is the ticker symbol for Tesla. I'm going to go with this one from NASDAQ. After that, you want to click on Indicators and type in Liquidity Sweep Filter. And it's going to be this one by AlgoAlpha. Ladies and gentlemen, this is the all-powerful Liquidity Sweep Filter Indicator by AlgoAlpha. It's a tool designed to help traders identify liquidity sweeps, which occur when a large number of orders, typically buy stops, sell stops, or stop-loss orders, are triggered, causing rapid price movement. By detecting these liquidity events, the indicator enables traders to anticipate potential reversals and market structure shifts, making it particularly useful in volatile market conditions. The first step this indicator takes is detecting a liquidity sweep by tracking swing highs and swing lows, which are price points where many retail traders tend to place their stop losses or stop orders. When these orders get triggered, they create a sudden burst of buying or selling pressure known as a liquidity sweep. Earlier in the video, I mentioned buy-side liquidity and sell-side liquidity, and you may be thinking, but what do those terms actually mean? Well, sell-side liquidity often refers to a swing low where retail traders are believed to have placed their sell stop orders or stop losses for their long positions. When the market reaches that swing low, it triggers a surge of buying pressure, pushing the price upward. On the other hand, buy-side liquidity typically refers to a swing high where retail traders are believed to have placed their buy-stop orders or stop losses for their short positions. When the market reaches that swing high, it triggers a burst of selling pressure, causing the price to drop. Now, to better understand how this indicator works, let's take a look at its visual components. Now, the first major component is the trend filter, which visually distinguishes bullish and bearish trends. When it's green, the market is in a bullish phase. When it's red, the market is in a bearish phase. You'll also notice trend shift triangles, which appear during transitions between bullish and bearish trends. A red triangle appears when the trend shifts from bearish to bullish. A green triangle appears when the trend shifts from bearish to bullish. The trend filter works by calculating a basis and defining trend shifts when the closing price crosses above or below the upper or lower bands, respectively. Next, we have these horizontal lines, which represent liquidity levels. They appear in different colors depending on the trend. In a bullish trend, the lines are green and indicate sell-side liquidity. In a bearish trend, the lines are red and indicate buy-side liquidity. You'll notice that some of the lines are actually brighter than others. A brighter line indicates a higher concentration of stop orders and stop-loss orders at that price, while a darker line suggests fewer orders. Essentially, the brighter the line, the more significant the liquidity at that level. Now, when the price reaches one of these liquidity levels, a liquidity sweep occurs. The indicator highlights these liquidity sweeps with up and down arrows. A green upward arrow indicates a bullish liquidity sweep, signaling that the price is likely to move upwards. A red downward arrow marks a bearish liquidity sweep, suggesting the price may go lower. The indicator also filters these liquidity sweeps based on the overall trend of the market. In a bullish trend, you'll only see sell-side liquidity levels, these green horizontal lines, and their corresponding bullish sweeps. In a bearish trend, you'll only see buy-side liquidity levels, these red lines, and their corresponding bearish sweeps. This alignment helps you to stay on the right side of the market by trading in the direction of the overall trend. You might also notice that we have two types of liquidity sweep labels. Hollow triangles indicate minor liquidity sweeps, where orders get absorbed more slowly, meaning your stop loss is being taken out gradually. Solid triangles represent major liquidity sweeps triggered by a stronger, faster move and are typically considered higher impact signals. When using this indicator to trade, we're going to be focusing on these solid triangles, which represent major liquidity sweeps. Now, as you can see, alongside each liquidity sweep, there is a number showing the volume at that swing point. This helps you see how much buying or selling pressure accompanied that particular liquidity sweep. For example, this liquidity sweep happened right here, and this is the corresponding volume for that particular candle. This is another liquidity sweep, and this is the volume. Essentially, you want to look for higher volume during a liquidity sweep as it indicates stronger market interest and momentum at that price. The indicator also features a volume profile overlay, which shows where trading activity is most concentrated at different prices. The brightest bars represent the highest volume zones, while darker bars indicate areas of lower volume. To use it, you can just place a horizontal line at one of the brighter bars to pinpoint an exact price level with heightened volume, because these levels attract significant interest. Prices often react strongly to these levels, either bouncing off or breaking through with force. You'll also notice a bounding box that specifies which portion of the chart the volume profile is analyzing. By default, it might only include the most recent candles, since recent data often provides the most relevant insights. If you want to include more historical bars, you simply double-click on the indicator, and then in the settings, you can adjust the bounding box resolution, for instance, changing it from 40 to 200. Additionally, the scale option lets you control how wide the volume profile bars appear, making them easier to see if needed. Now, while we're still in the settings, let's go over what each of these settings actually mean. Up at the top, you can see we have the length, which represent the number of periods used for trend calculations. A longer length creates a smoother and longer-term trend ribbon. A shorter length makes the trend ribbon more reactive to price changes. Next, we have the multiplier, which is the factor for the standard deviation calculation. Higher values create wider bands and make the indicator more resistant to noise. And then here we have the source, which determines the price data, such as close, high, or low, that is going to be used for trend filtering. The major sweep threshold is the value that determines what constitutes a major liquidity sweep. Higher values mean only larger price movements will be considered as major sweeps. And remember, we only have between 0 to 100. Larger values make it harder for sweeps to be considered major. And then here we have options to show or hide major and minor liquidations. For me, I'm going to disable the show minor liquidations options because I'm not going to be needing the minor liquidations for my strategy. Here you can decide to show the volume profile as well as the bounding box. I'm going to hide the bounding box, but I'll leave the volume profile enabled. I'm not going to change any of these settings. Down here we can customize the colors for bullish, bearish, and profile colors. The Style tab has several visual options that we can toggle on or off. For me, I'm going to disable the bullish sweep, the bearish sweep, the bullish trend, the bearish trend. After that, click OK. The chart is now cleaner, so let's go over how we can use this indicator to trade. To take a long position, the first condition is to ensure that the market is bullish. You just want to take a look at the trend filter, and it should be colored green with a price trading above it like this. Condition number 2. Within that bullish trend, we're going to be looking for a major bullish liquidity sweep indicated by a solid green upward arrow like this. Once we have the liquidity sweep, you want to check the volume of that candle during the liquidation, and it should be at least 150,000. Right now you can see it's at 850.52k, which is above our limit. Remember, the 150k limit only applies to the 15-minute time frame. If you're using a different different time frame, you'll have to multiply the time frame number in minutes by 10,000. For example, if it's the 10-minute time frame, you multiply 10 by 10,000. You get 100K as your minimum. If it's the 1-hour time frame, that is 60 minutes, so you multiply 60 by 10,000 to get 600K as your minimum for the 1-hour time frame. With that formula, you can basically calculate the minimum for any time frame. Now, once we have the volume threshold met, we want to look at the volume profile overlay and ensure there is at least one super bright volume bar within the high and low of the liquidity candle, indicating a price point of high interest. If we don't see any bright volume bars in the candle's price range, the entry would become invalid. The way you mark the range is you place a horizontal line at the top of the candle and another one at the low of the candle. Now, within this range, as you can see, we had at least one super bright volume bar. This is what we're looking for. We obviously can't enter a trade on a red candle, so we want to wait for a green candle to be printed. And throughout this wait, the trend should remain bullish. Once a green candle appears, like this one, we take a long position. The stop loss is going to be placed in line with the trend filter line, and the take profit will be set at 1.5 times the risk. Letting the trade run, and it was profitable. Now, here's another long position. As you can see, the market was bullish because the trend filter was green and the price was trading above it. Then the second condition is met because we had a major bullish liquidity sweep when the price came back down and reached several sell-side liquidity levels. That was confirmed by the upward arrow you see right here, indicating a potential upward movement. Looking at the volume during this liquidity sweep, it was at 299,000, which is above our 150K limit. For extra confirmation, we mark the candle's range from its high to its low. Within that range, the volume profile overlay indicates a high volume bar at this particular area. We then wait for at least one green candle before taking the trade, and the market trend should remain bullish during this wait. Once a green candle appears, we take a long position. The stop loss is placed either at the trend ribbon or at the most recent swing low, and the take profit is going to be set at 1.5 times the risk. Letting the trade run, and it was profitable. Now, for a short position, we're going to do the opposite. Let me show you. Condition number one is that the market should be bearish, indicated by the red trend filter. Condition number two is for the price to reach a buy-side liquidity level and undergo a liquidity sweep, confirmed by a major liquidity sweep signal suggesting the price might go lower. Looking at the volume, it was 1.884 million, far above our 150K limit, indicating strong market interest. Next, we mark the candle's high and low, and then we check the volume profile overlay within this range. We need at least one volume bar in the brightest or the second brightest shade of red. And here we have three super bright red bars. We enter our short position on the close of this red candle. The stop loss is going to be placed at the trend ribbon. The take profit is going to be set at 1.5 times the risk, letting the trade run. And as you can see, it was profitable. Well, that's it for this video. A simple yet accurate strategy using the Liquidity Sweep Filter Indicator. Go ahead and test it out in your trading system and see how much better you can make it to make it super profitable. If you found value in this video, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.